Hello friends, let's understand systemic risk. What exactly are systemic risks? What are the sources? How are these risks different from other types of risks? And can we plan and mitigate against systemic risk? And if yes, how do we do that? Systemic risk, as the name suggests, enter in the entire system. For example, the financial system and the economic or the business system of India. They result from macroeconomic and other factors. For example, the relationship with the foreign countries. Because they are in the entire system, they impact each and every business or each and every industry in the particular system. But they might impact some of them more, they might impact some of them less. Also, the impact of systemic changes or systemic risk could be positive for some of the industries, could be negative for some of the industries. So systemic risk can also present opportunities for some of the new players in the industry if they are innovative. By nature, systemic risks, since they are system-wide, they are difficult to avoid, of course, and they are difficult to mitigate as well. And it is difficult to estimate the financial impact of systemic risk and also to budget for those kind of risks. I'll classify systemic risk into 5 main categories. Number 1, economical. Number 2, political. Number 3, social. Number 4, country risk. And number 5, force majeure related risk. Let's look at each of these in detail. Number 1, economic risk. So economic risks relate to the performance of the world economy in general. For example, the entire world economy was impacted in, let's say, 1929, the Great Depression, or let's say post World War II, the entire world economy boomed. For example, recently in 2022, the entire world economy was impacted with inflation and rising interest rates. The impact could be regional. For example, there could be in European Union, there could be certain impact, so it will impact all countries in the European Union. Or it could be at the country level. For example, we know in some of the countries, the inflation has been very high in 2022 and 23. Venezuela is just an example. Right? So it will impact all the industries and all the businesses operating in that particular country. Inflation, of course, is one of the biggest economic risks that we can see. A very high level of inflation is in general not good for any of the businesses. In general, the consensus view of the economists is that there should be a small or moderate level of inflation in any economy. The interest rates going very, very high, for example, obviously is not good because it's very difficult for businesses to raise funds and also to service their existing liabilities to the people from whom they have borrowed. Fluctuation in the foreign exchange rates are again very, very difficult for businesses to manage. Their cost of inputs can go very, very high, for example, or if there is an adverse movement in the currency, they're realizing from the foreign exchange earnings will be very, very low. Currency reserves depletion, again not good. For example, we had a very low level of currency reserves in 1991. India almost went bankrupt, so we had to place gold with the IMF and World Bank to borrow money, right? So it's again economic risk that entire businesses in India carried at that particular moment. The jobs status in the economy, for example, the confidence, business confidence. So a lot of the surveys etc track the business confidence, the ease of doing business, for example, how the approvals come through etc, how smooth the business processes are, the approval processes are. They impact the economy as a whole and they impact the businesses in the economy. Recently, I think, just to reiterate, we had a high level of inflation and then high interest rates in 2022 globally as well as in India, right? So it's a economic risk that everybody has to accept. Now, how do you mitigate against this kind of risk? It is very difficult to mitigate against this kind of risk. You have to bear certain impact, definitely. But one way of getting out of this is to be a global player. For example, if you are only in a particular country, then obviously you are impacted by the economic risk in that particular country. If you're a global player, unless the global economy itself is getting impacted, your impact can be avoided because of the diversification. The second source of the systemic risk is the political risk. There are broadly two types of governments that we can see. We can say there is a democracy or there is a dictatorship. So in democracies, the unstable governments, for example, a particular party with certain kind of a program not being elected to power, and then there is a combination of various parties working together, so which is typically through alliances, and then they are likely to have a common minimum program which may or may not get implemented. There may not be a strong decision making authority in that case, so in that case, for example, there is no clear direction for the economy and the country. So this is one of the political risks that many countries which are democratic countries, they do carry. In case of a dictatorial kind of environment, any change in leadership, for example, comes with a lot of risks. There may be a lot of fallout of that. Any change in power structure, the military relationship between the government and the military, for example, that can cause a lot of destabilization in the economy. The interference of foreign powers in certain economies, for example, is a great source of political risk. So this can impact business climate to a very large extent. The funding can be impacted to a large extent. For example, if the country is not politically stable, the outsiders will not be willing to invest in that particular country because they don't know how the decisions are going to happen. The regulation will not be stable because the different parties coming into power can keep changing regulation to their whims and fancies. Also, the international business can get impacted because the international players will not buy from you, as an example, right? So if you are, let's say, country which is going to a lot of political turmoil, then the foreign investors may not put money here through FIIs, or they may not invest here through FDI, for example, or they may not even buy from or outsource to your country. So again, the political risks are difficult for a business to manage. They are in the entire environment, and there is nothing much a particular business or industry can do. The third type of the systemic risk is basically social risk. So social risk comes from the social climate in a particular country or in a particular region. So for example, if that region or that country is peaceful, or whether that is having a lot of conflicts within the various groups in the society. Are there regular mass movements, strikes, unionism? Are there law and order instances, or are, the example, violent incidences taking place, right? So these kind of things will adversely impact the production environment and the entire business environment. This can cause business disruption. For example, the investments or divestment decisions will be influenced by the social tensions, etc. There will not be a flexibility in hiring the right kind of employees, or in, let's say, laying off the right kind of employees. For example, there is a very strong unionism, and also the supply chains can get impacted because of the social risk. If there are strikes, for example, people are sort of making rasta rokos, etc. It can impact the businesses very heavily. How do you mitigate against social risk? Obviously, I think there's a limited way you can mitigate, but yes, you can diversify your manufacturing bases or locations, or you can, for example, if you are procuring certain key raw material, you can procure it from, let's say, different regions. You can get the skilled employees from various places. You can set up businesses in various places, so that at least in some places there is no disruption. You can, again, when you are taking the outsourcing decisions, you can diversify and make sure you're not dependent on a single region or in a single, for example, town. Vendor base you can diversify, and you can strengthen the physical security or the perimeter security to make sure that any kind of social unrest is not impacting your business directly. The fourth source or the fourth type of the systemic risk is the country risk. Now, country risk means risks that are very specific to a particular country. For example, wars. If the country gets into a war or a warlike situation, there are border skirmishes with neighboring countries. If there are a lot of illegal migrants in the country, for example, or there are non-state actors, state actors which are sort of getting into terror kind of activities. And one more thing is, if the sovereign ratings of the country suffer. So we know there are three large global credit rating agencies: Standard & Poor's, Fitch, and Moody's. If they lower the rating of any country below investment grade, then typically it will impact the investment inflow to a very large extent, and the investments funds might flow out of that country, leading to a huge crisis. So country risk can lead to a lot of instability. The purchasing power of the people within the economy is heavily dependent on the risk in the economy or the country. Consumer confidence can go up and down. The growth can get impacted, and the investment climate can also get impacted depending on the country risk. The mitigation again is limited. As I keep saying, the systemic risks are in general difficult to mitigate. There is a very limited scope for mitigating against the country risk. The only way you can do it, you can diversify beyond the national boundaries. The fifth major source or type of the systemic risk is the force majeure risk. Now these we have seen very recently happen in case of COVID-19. There were businesses which were simply not able to operate because there were government restrictions on for example manufacturing, on opening shops or opening industries. So this is called an act of God, or something that the businesses cannot do anything against. So if you had a contract with a counterparty which was impacted by COVID-19, and because of government regulation of not, let's say, letting anybody come to manufacturing location, then in that case obviously you cannot demand the compensation from them, because most of the contracts will have these force majeure provisions whereby they will say there is an act of God, or there is something, for example, beyond our control because of which we cannot produce and supply, then obviously will not be liable to make those supplies, and will not be liable to pay any damages also, which I think is a fair provision in many of the contracts. So you cannot have any compensation or recourse in that particular case. Again, examples, natural calamity is an example that can be taken as the valid excuse by your vendors, outsourcing partners, etc. Disasters, or I think the COVID epidemic, endemic, those kind of are examples which can lead to force majeure risk. Again, limited migration mitigation against this risk is possible, because again these are something beyond your control. So as I said, on all these 5 kind of causes, for example, the mitigation or prevention of risk is largely outside the business scope. But what they can do is, for example, through something like insurance, diversification of supply chain, you can manage it to a certain extent. Understanding this systemic risk will help you plan your finances, plan your contracts, supply chain, etc. better. And if you are looking to make a career in risk management, it will help you identify this kind of risk and demonstrate your skills to the prospective employers and have a great career. So I hope you found this video useful. If yes, please do like this video, share with your friends, and also subscribe to my channel. Thank you very much. Cheers.